Hi, and welcome to the Market Alert for Wednesday, the 18th of November 2015. And another tough day at the office. Very unusual to get 2 consecutive days where it's hard pounding. We've not had this for a very, very long time. Certainly we get the odd day, but not consecutive days. But yesterday I was able to recover the loss for yesterday, and I'll show you how that occurred as we go through this video. We started off with the long signal. This was filled. Actually, before I do that, let me just go back and tell you what the issue we've got at the moment. At this time, the market is news driven. There's absolutely no doubts about that. The market was marked down. We've got these very long range bars that exceed the 1825 range that we have set for the indicator, so we're not picking these up. This is a 40 plus bar, as is this one. This is 35 points, and therefore we're not picking up the signal. So we're getting this volatility at the beginning, and then what we're finding is that once the market settles down, we're getting the signals after the volatility starts to abate, and then of course it runs out of momentum, and then the market goes sideways. And this is what happened during yesterday. Now, the only thing we can do to overcome this is to actually increase the range of the bar, but I'm disinclined to do that at the moment because I just want to see if the market's going to settle down a bit, and especially for today, as we've got Yellen speaking at 7 p.m. this evening. More on that in just a bit, but the moment the market is very much news driven. And also, to add into the mix, of course, we've got the tragic event of Friday of last week as well, and this is why we're seeing what we're seeing as well, because it's created a lot of global uncertainty as to where and when the next strike may occur as well. So this is not helping matters at all, but given the fact that none of us were involved in the tragedy of Friday, it's a small price to pay, having market that's driven more by news than by financial matters at the moment. But that said, we could do with adapting the strategy for the current climate as well. So it's a difficult one, and one that I've not been in since 2001, and that was easily sorted because George Bush closed the stock markets for 3 days to give the markets chance to settle. We're now on the 3rd day of the market, so hopefully the situation with regards to Friday and its influence in the market will start to leave. And again, I don't mean that in a mercenary way at all. It's just that things do get back to normal following such tragic circumstances. So, like I say, the issue is we get a lot of volatility to begin with. The market then takes its direction, and then, or the opposite direction, then moves higher, and it's driven by economic news at the moment, as well as the geopolitical events as well. So this was the mortgage delinquencies here. The market was marked down. It came out better than forecast, and then the market reversed and moved higher. And because of the range of these bars, we're not picking up the signals earlier. We can extend it and we can reduce the bet per point, but like I said at the intro, I'm sort of disinclined to do that just at the moment. So the market starts to run out of momentum here, and it actually just filled the order. And as I was watching this, I was hoping it wasn't actually going to fill it, because we were sort of 2 hours into the trading session anyway, or heading that way, heading towards the quiet time. But the market filled it and then traded sideways. We had a sell signal. The market came back. That was taken out because the stop was hit before the entry, and then the market traded sideways and then eventually started to move higher. As we head in towards the quiet time there, you can see we had a maximum of I'll just bring you the maximum there. Might just be able to get it, I might not. There we go, just bring that back a bit. Around 16 points. We got close to the scalp, but not close enough. So if you were still in the trade, as I was, the market came back. You can see there in the quiet time now, the market's drifting sideways. I was hoping it would have another go at the scalp target during this part of the session. The market attempted it. It came back. You can see they were back up at 11 points. So it wasn't a case of not having profits. We just didn't get to the 17,600 level or the actual scalp. So we're given the chance, but we just didn't have the opportunity to take it off the table. So I've rescaled the chart there, and the market coming back, and we can see we've got an issue. The market's just banging its head and not moving higher, but that doesn't mean to say that it won't move higher without having a crystal ball. Who knows? So again, prices move sideways, come back up, and then we'll see the market, if I fast forward a bit more, coming down. Now when you get this type of price bar where it immediately drops, we know there's some news that's hit the market, because the range of these bars have been fairly quiet beforehand. So when you get this big bar that's far greater than the average come down and do something like this, you know you've got a problem. We had this the previous day as well, if you go back and have a look, and the market then tries to find support, and at this point we're 25 points down. If we know that if this line is broken, as the market came down to it that time but managed to move higher, this time it's broken it and it's now struggling to get back above it, you'll see the market take out the trade, which it does. Very, very frustrating, especially after Monday as well. So let's fast forward to the evening session, and we have another buy signal, and it's a case of having to go with the flow, because otherwise you've got no chance of actually making up any of the losses if you don't continue to trade the signals. That's all par for the course. It's a test of resolve, and as I said in yesterday's market alert, that's exactly what yesterday was as well. But like I say, they are rare. It doesn't look it when you're actually stuck in the middle of it, but these days are rare. If you just go back and have a look at all of the results, you'll see that is the case. And again, like I say, what's thrown into the mix is the events from Friday as well. It may, in hindsight, of course, be best to stand aside until Wednesday, but we just don't know how the market's going to react to such events. Generally, as I said yesterday, war is good for the market, and the market generally goes up, but yesterday it just ran out of steam. So we have another signal, and we see the market put in another short. This wasn't filled as the market moves higher. Again, we can see immediately, and also notice this as well, when the market, the bar that drives through, you can see how it opens and comes back, and we had the same thing here as well, and then it became a resistance, and we have exactly that same thing again, and that same bar again that we had there where the market came back. So in a situation where you are a buyer of the market and you see this in the future, it can actually allow you to say, look, if it comes back to here, I'm out, and just take the small loss and wait for the signal. The same here, it was only a 25 point loss to there as opposed to 40 points to the actual stop price. So the market comes through, and now we get a sell signal, and we take a 17 point loss at this point. And now I'm sitting and thinking, well, come on, if you're not going to go up, you've tried to go up here, you've tried to go up here and here, you've got this resistance here, surely we've got to move to the downside. And eventually we do, and you can see there the market moving down, and now it drives through here. Now, I've said this before, and I've also received the question about trailing the stop, and I don't actually trail the stop on this one. What I'm doing is watching it and giving it room to breathe, because I'm now trying to make up a 57 point loss from the earlier loss on the 40 points and then the 17 points on this one. So I'm looking for the market to go down to this level here, which is the 17,450 level, and you'll see that all I do is move the stop to break even. Now we get another signal here as well, and we can see the market banging its head against this, so it's now become a resistance level. We can see before it was support as the market moved higher, now it's struggling to get back above here, and eventually you'll see the market move down. Now I'm just going to wind that back a bit. You can see the market came up towards the stop loss there as well, which in effect would be the 50 point trailing stop, because the initial stop is 50%. So that's where I would have placed the first, and then the market of course didn't hit that, came back down, and you'll see prices starting to trade sideways, and now the volatility really increases, but eventually You can see there the entry price. It's just got the entry. I haven't put any 50% on or anything. I'm just leaving the stop at break even. I need to give this market room to breathe because there's a lot of volatility around. I want the market to actually close back below that 17,500, which it does, and then eventually you'll see the market come down and hit this level at 82 points profit, therefore making up the 57 as well. It could have gone horribly wrong in the sense that I would have had to take the additional 2 losses on the chin. But as this market didn't want to go up, there's only other one thing for that, or 2 things really, sideways or lower. And the momentum was to the downside as the market broke here and then tried to come back. It was telling me that it was struggling. Here was a bit of an interesting bar. I thought we were going to see a reversal and an attempt to bring the market back, but then it reversed and then eventually had to give way and trade down to the 17,450 level. And then eventually you see the market come down to this once more. Probably 2 more times that it came down, and then eventually you can see the market coming back, and then I've called it a day buy now, and you can see the market trading sideways and coming back to this level here and struggling once more. So bringing things up to date, you can see the market still struggling with the 17,500 on the overnight session there, and now is in a bit of a no man's land, as it were. Let me just adjust this so you can see where we are, and then just drag that across. So you can see we've got this sideways range, and the reason for that, if we look at the daily chart, you can see that the market now struggling with the 17,550 level, which it will have gone through and come back. And the reason the market's trading sideways is because today it's a big one. We've got the FOMC meeting at 7 p.m, crude oil inventories at 3:30. They are stockpiling, and the previous they had 4.2 million barrels in stock. It looks like the forecast is for 2 million barrels for today. Now normally we wouldn't take any notice of this, but this at the moment is a very good barometer of the slowdown in the global economy. We've also got housing starts at 1:30 as well, and building permits as well, but those 2 items are out before the market opens. 7 p.m, you don't want to be in the market. How is the market going to open? I have no idea at this point. What can happen when you've got an FOMC meeting? There are 2 things. You get a very good move beforehand, and then you get nothing after the market doesn't react, or you get a very quiet session up until the FOMC minutes, and then all hell breaks loose. Now, given that December the 16th is D-Day for interest rate decision by the Fed, we could see the market being very, very quiet in that first part of the session as it waits to hear what is in the Federal Reserve minutes from last month. But I think most people know what's going to be in it. Again, it's as simple as this. If you have a trade on and the momentum's there, you get to the scalp and go beyond a bit, and the market's moving in your direction, then stay with it and maximize the profits. But don't be in the market for the release of the minutes at 7 p.m. You don't want to be in, just in case there's something in there. Otherwise, you can see a very strong and wild move. And I have seen 100 point, 200 point bars off the FOMC meetings over the last 7 or 8 years. Right, and finally, let's have a quick look at the implied volatility. And yesterday, 1578 up slightly on the Monday's trade, but not as much as I thought, given that the market dropped 100 points towards the close of the session there. So again, interesting picture that's coming out there. I would have thought that would have increased more, but obviously there's more to the downside if it's only increasing in smaller increments at the moment. Right, that's it for today. Let's fingers crossed that things start to get back to a bit more normal than they have been for the last couple of days. That's it from me for today. Thanks for watching. See you in the next one.